last one.
All right, so the last one that we're looking at is your employment.
The employment. Okay.
So with your employment, like we had covered earlier, you want 2 years in the industry, and you want 1 year at your current location.
Consecutive, right?
Consecutive.
Okay.
No job gap greater than 30 days. So, for instance, I had a client that worked for the same company. She worked for Lowe's for 15 years. But in the last year and a half, about a year and a half ago, she relocated. You know how it is. When you're moving across country, you can't get that done in a weekend.
No.
So she took 2 weeks to get that done and went right back to work. She stayed employed at the same company. So that meets both the industry and location guidelines, and she took less than 30 days off. So she still was able to qualify under the employment guidelines.
And she probably still had some sort of income in those 2 weeks from like vacation time or something that could still constitute as income.
Right.
So,
it did not affect what her income qualification was.
Okay, so let's take that a step further. What about somebody with something like a maternity leave, or it could be multiple months of job absence? Is that going to affect the borrowing?
Yeah, unfortunately it can. Not necessarily on the employment side. It may affect on the income side.
But let's say it didn't. Let's say this person was paid for the maternity leave on a bi-weekly basis or monthly basis or whatever. Would they still qualify?
Yeah, absolutely.
Okay.
Provided that the employer can verify that Jane Smith was employed with ABC through that time period, then absolutely, they still qualify. Even though it may have been structured as a vacation or maternity leave, they still
got paid.
Right.
So hey, money still came in. And there was nothing, holding them back. Exactly. What about, when you started a company, let's just take your Lowe's example, and you're working just register, and within 2 years you move up to manager and then to store manager or whatever scale they have in there. How do you guys look at that, or how does the industry look at that income change between coming from register and going into management level and eventually store manager, all within, let's just say, that 2-year span?
And I have had that. It's very common for me to have borrowers that in 1 year they made a little bit less than they did in the current year.
Right.
Provided that there isn't a drastic change, for instance, if they didn't go from $20,000 a year to now they're making $100,000 a year, they'll actually use that greater amount, or they may take an average of the two, depending on what
the situation is. So if it's a huge difference, you're probably thinking more of an average between the 20 and the 100, or whatever the two examples is.
And if it is a large difference, then they may ask for what we call just a letter of explanation.
Okay.
This is where the borrower would document why the change happened and what he anticipates for the future.
A letter of explanation from the borrower or from the employer?
From the borrower.
Okay.
And these may come up in various instances. If, for instance, there was a late payment on your credit report.
Okay.
A lot of times, that's not an item that can be necessarily resolved. They'll ask for a letter of explanation and say, well, why did that happen?
Sure, okay.
For instance, with the income, there's a large jump in the income. They'll ask, well, why did that happen? And that's usually just basically their way of the bank sitting down, if we had the ability for the bank to sit on this side of the table and the borrower to sit on the other side, and they ask the questions, okay, well, I don't know what happened here.
Sure.
Can you explain
Yeah.
that? So that way everything's packaged
that's good. Okay.
up.
So it's not so, if this then that, there's still some room for explanation or even some error.
Absolutely.
But as far going back to the promotion guideline, there's really not going to be an issue. It's just you're still gonna get a loan. It's just a matter of how much, right?
Right. And a lot of times something as simple as a letter of explanation will allow a bank to make that decision. We'll say that yes. Provided that there's not a whole lot of other wobbly legs.
Sure. Okay, absolutely. Well, that's important too. Income and employment is the bread and butter. Without income, you can't purchase a house. Which again, we go back to our example in the mid-2000s, people getting qualified with no employment or limited income that was not reflective of what they were borrowing at all.
Or stating their income. Just pick a number.
Yeah. And that's good enough for us, right?
Yeah, at the time.
At the time it was.
Absolutely. So it's a very different industry.